Good morning. Thank you for joining us for this webinar series, Integrating Sustainability into Your Small Business Using the ESG Model. Today is session 2 of our 3-part series. I'm your moderator, Renee Goodnow from the New York Small Business Development Center. Today's host is the PACE Small Business Development Center. The PACE SBDC is part of the New York SBDC's network of 22 campus-based centers and outreach offices, which are located across New York State. The New York SBDC is U.S. Small Business Administration resource partner. Our free services are made possible by funding from the SBA, New York State, and our host campuses. Joining us to lead things off and to introduce our speakers is PACE SBDC Director Andrew Flam. Andrew, I'll turn things over to you.
Okay, thanks so much, Renee. Good morning, everyone. Thanks for joining us today. As Renee mentioned, this is the second session of a 3-part series that we're pleased to be presenting on sustainable businesses and integrating the sustainability into your small business model. As Renee mentioned, Andrew Flam here from the PACE University Small Business Development Center. We're located in Lower Manhattan and one of 22 centers located throughout New York State. We're all staffed by full-time business advisors helping provide one-on-one business advisory services to small business owners looking to either launch or expand their small businesses here in New York State. All of our services are offered at no cost, and we're delighted to be able to help businesses here. I guess where our focus is those on here in Lower Manhattan, but obviously we have colleagues that are able to support and help build and grow businesses throughout the state. Our focus is, as I said, one-on-one business advisory services in areas such as access to finance, looking at marketing and sales strategies, thinking about operational challenges, procurement opportunities, certifications that may be relevant to your business. So don't want to kind of dwell too much on this because we have a lot of material to cover today, but if there are issue areas such as these that may be of interest to you and you're not working with a business advisor yet from one of the SBDC centers, please do reach out and contact us. I'll add our contact info as well as a link in the chat in terms of how you can request services. Just takes a quick couple of minutes to fill out a quick request for counseling. We also do, as today is an example of a wide range of training programs that are available to businesses and aspiring entrepreneurs throughout New York State. Those that we host as well as those from our colleagues from throughout the state. With that, I wanted to turn the floor over to my colleagues, Professor Steve Mezzio, as well as Richard Kravitz, who are going to be leading today's session on integrating the value of sustainability in a small business model. And we'll be back to join you all for the Q&A. But Steve and Rick, again, really appreciate you leading this charge and look forward to your presentation today. Thank you both.
Thank you, Andrew. Thank you, Renee. It's a pleasure to be here. Welcome, everyone. We appreciate your attendance. If we can go to the next slide, please. As we talk about today's agenda, I just want to give some context. This is the second, as Andrew mentioned, the second in a 3-part series on ESG and small business. Our first seminar last month was a broader perspective on ESG. It discussed a bit about sort of the context of ESG, some terminology definitions, and just a broader sort of mission around how small businesses integrate ESG into their business model. Today's session and the session in June, the third in the series, will be on more narrow topics. And today our topic is specifically oriented towards a sustainable business purpose, as we're calling it. And so the way we are going to approach that topic of sustainable business purpose is through 3 parts. First, we're just going to give some context and sort of discuss a bit about what actually is an integrated business purpose and why is it important for companies generally and small businesses specifically. We'll then follow that up with some real-world examples of ESG purpose statements. And then finally, at the end, we will present some considerations around what you might do as an organization, regardless of your size or your sector or your types of services or products, what you might do to either create a new sustainable business purpose statement or modify or expand or evolve your current business purpose statement. Just as by way of introduction, my name is Steve Mezzio. I am a associate dean at Pace University. I am also the executive director of a center in the business school called the Center for Sustainable Business. Prior to joining Pace University, I spent my career in professional services, including serving as a partner at PricewaterhouseCoopers. I'm going to turn it over to Rick for a brief introduction.
Hi, I'm Rick Kravitz. I'm the editor-in-chief of the CPA Journal and managing director of content and publishing for the New York State Society of CPAs. Also teach a couple courses in the graduate program at Texas A&M Law School and their LLM MJUR program on risk management.
So Rick and I have spent quite a few years in this sustainability space, and we've worked together and we've worked separately and have bring several number of years experience on a diverse range of issues. So we're hoping that will benefit you as the audience today. So we're going to begin with the first part of our discussion, which is what is an ESG-driven integrated purpose and why is it important? And we'll begin with the next slide and look a little bit look at what the new lens of ESG is. So this is a statement by KPMG, and the idea here is that the performance of a business, the brand of a business, the reputation of a business today is increasingly being viewed through a lens of environmental, social, and governance sort of performance measures, ESG. So as you can see from the KPMG quote here, ESG is the new lens through which companies will be evaluated. And those companies that not only embrace these principles, but actually sort of have the rubber meet the road and positively demonstrate their commitment through action will be clear winners going forward. And KPMG, along with many other sort of advisory firms and many other organizations and influencers in the sustainability space, are clear that those companies that embrace ESG, along with their traditional profit motives and profit objectives, will clearly achieve a competitive advantage going forward. The question is, how do you do it and how do you successfully do it going forward? On the next slide, we see McKinsey, which is a major global consulting firm, again speaks to competitive advantage of quote unquote a purpose-driven firm. Companies should integrate ESG into their purpose, strategy, business models, and act on them. So one of the things we're going to discuss in a minute is this idea of a business purpose statement, which is a very concise statement of an organization's purpose or reason for existence. If you think about sort of a more traditional vision statement, that would be sort of a similar idea, but here it's being called a purpose statement to address this new ESG business purpose sort of paradigm that we're seeing evolve and increasingly be embraced by most companies. So in the next slide, I'm going to turn it over to Rick. And Rick, if you could take us through a little bit more on what exactly are we talking about a sustainable business purpose?
Sure. Sustainable business purpose really serves the needs and the changing demands of your customers over the long term. SBP, or Sustainable Business Purpose, provides purpose and the reason why you are in business. It focuses on serving your customer needs for the products, services, technologies, and leadership that your customers, employees, and others demand to put your business ahead of your competition. And third, the focus of SBP is really on long-term value creation and long-term sustainable growth and prosperity for your enterprise. In fact, these are the values that propel your business, the intangible values that put your business ahead of your competition. And finally, the fact is that SBP aligns your business with the demands of your customers and stakeholders, your employees, your investors, your lenders, your suppliers, and the community that you live in.
Rick, let's just pause before the next slide, and I want to sort of probe a little bit more on that last bullet that you just described. So if you think about a purpose, just a purpose generally, it's just really what's my reason for existence as an organization? Why am I here? What's my value proposition to the marketplace or to my stakeholders?
Steve, it's Jim. Why am I in business is really the question.
Why am I in business? Now, this is not a new question. I mean, those of us that have founded companies really begin with that, is we have a certain passion, perhaps, we have a certain skill set, a combination of the two, and say, this is really what I want to do with this business. What's changed now? Why is this any different than it has been from the beginning of time in creating businesses and operating businesses?
And I think the reason is the changing needs and demands of your customers, of the investors and lenders in this SBP arena.
And those changing needs are driven by what?
They're driven by a lot of things. First of all, customer demand, consumer demand, investment demand, and a global focus on making the world a better place. And on a micro level, how your business or enterprise or firm can actually contribute to a more sustainable future.
I think that's such an important point, Rick. And during our last webinar, we discussed this idea of moving away from being solely profit-oriented focus in any business, and expanding it to what we called in the last webinar the triple bottom line. And the traditional bottom line was, what's the bottom line, was profits and losses. The triple bottom line has taken that notion and expanded it to a triple bottom line. And the triple bottom line, as it's called, are people, planet, and profits. So the idea is we still, as any organization, need to focus on profits. Profits are crucial. If we're not profitable, we can't exist. If we don't exist, we stop paying our vendors, we stop paying our employees, we could negatively impact the communities we operate in. So we want companies to continue to be profitable. But now we've expanded this idea of a triple bottom line, and we've added two additional quote unquote bottom lines. The people piece, which is what are our contributions to social responsibility, and the planet piece, which is what's our environmental stewardship responsibility. So we see the ESG translated into people, planet, and profits. And so what our stakeholders are looking at now from our purpose and our purpose statements is, what company are you doing not only to be profitable and successful, we want you to be that, but what are you doing for social responsibility and environmental stewardship? Is that a fair way, Rick, to sort of describe it?
Absolutely, Stephen. And one other point, it's not only profits now. The big 5 largest institutional investors in the world, the Fidelities, Vanguards, BlackRocks, and others, are focusing on profits with purpose. In other words, it's not enough anymore for our stakeholders just to generate profits. Everybody wants something more.
Exactly. And the good news is that even if you're not using these types of terms, even if you're not sort of fully integrating and embracing much of the ESG sort of initiatives that are going on, most companies are doing things that do have positive social impact and positive environmental responsibility. And what we're going to talk about today is, how do we capture that and communicate it perhaps in a more efficient and productive way. Go to the next slide, please. So Rick, you touched on some of these, but just expand a little bit more on what factors contribute to a sustainable business purpose.
Absolutely, Steve. In fact, there's really very little difference between traditional business purpose and sustainable business purpose. So among the most important factors that contribute to SBP in your business are the following. Do the right thing. I mean, this is no different than what you'd otherwise do, but it elevates this objective. Treat your customers, suppliers, investors, and employees ethically, responsibly, respectfully, and honestly, creating a positive atmosphere for an excellent working conditions for your employees. Then continuing to innovate sustainably, continuing to improve our business processes, your products, develop better and more efficient delivery systems. And 5, attend to natural resources, sustainable. You have to think about this when you're in your production processes, if that's the type of business you have. Sustainable sourcing, supply chain management, especially critical today, and employee safety.
Rick, I think these are such important points, but let me sort of take an intentionally opposing view. I'm a small business owner, and so I've always done this. I've always felt this way, and so, you know, there's nothing new here. Of course, I want to do the right thing. Of course, I want to treat my stakeholders with respect and honesty and with ethics. But I think the dramatic change is not in the content of these and other points similar to these. It's how we're now being held accountable and how we are being asked to actually measure and report how well we're doing on each of these and other attributes. Is that what you're saying? Or?
Absolutely, Stephen. I think it's also a demand from the stakeholders that you articulate your position in all of these areas that you discussed.
And that is critical. So I could be doing these things incredibly well, but maybe not, it's not as transparent to this broad range of stakeholders. And you really pointed out something crucial, which is, you know, stakeholders are not just your customers, they're your vendors, they're your employees, there's the communities that your businesses operate in. It's a far-reaching range of cohorts of stakeholders. And what makes it complicated is each cohort may have different priorities. You know, one set of cohorts might be more focused on your supply chain and how well the actors in that supply chain are being treated from a compensation and a workplace safety perspective, while another set of stakeholders may be more interested in the nature of your products and your impact on the environment. So it's a complicated sort of communication mechanism. And here's where the topic for today comes in, which is the purpose statement. While we're going to see needs to be brief, needs to be comprehensive as well, doesn't it, Rick?
Absolutely, Steve. And to your point, it's a holistic view of how your business exists, why it exists, and who it serves.
Exactly. The next slide, please. So we get this question quite a bit, and the idea is, well, you know, particularly for smaller businesses. Look, I don't have all the resources that a company like Starbucks or Pepsi may have. I don't have the time. You know, if I start focusing too much on this ESG stuff, I'm gonna take my eye off the ball on my core business and profitability. So obviously, if I integrate this ESG, it's going to actually result in less profits. What's your view on that, Rick?
Well, the statistics, in fact, reveal just the opposite. And in fact, especially during the last couple of years during the pandemic, a difficult period. Plus, the reputational capital gained by focusing on sustainability is, I guarantee, will propel you over your nearest competitors. But there's research behind this as well.
And Rick, during our last webinar, we discussed some of the ways in which, in fact, that properly applied, an ESG mindset and an ESG purpose can, in fact, add to profits. And so, for example, pricing. So do you want to expand a little bit on that?
Oh, absolutely. KPMG study, and this was a major study of business enterprise in America, is that consumers are willing to pay over 20% more for sustainably sourced and environmentally friendly goods. And if you go to every supermarket today, you see this. There's new categories of foods and new categories of products, and brand new entrepreneurial businesses that have started as a result that charge more for better, more sustainable products and goods.
And in fact, they'll charge more, and consumers are willing to pay more for those types of products, but they're also willing to pay more and engage more with companies that they feel as though they're not just buying a product or service, but at the same time, they feel, the customer feels like they're making a contribution either to the environment or to society. For example, we talked during the last webinar about Bombas, the sock company, and Bombas started out, like many of us here on this webinar, as a startup company, no business, no clients, but they created their startup business model intentionally integrating this ESG purpose that we're discussing today. And so how did they do that? They basically said, look, we're going to develop the best socks ever. So we're going to figure out all the things that annoy people, all of us about socks, and we're going to fix those. And these are going to be the best socks that anybody would want to buy. But they said, look, at the same time, as we launch this business, we're going to do something else. And we're going to be very focused on doing good in society. So what did they do? And in fact, Bombas was on Shark Tank initially before they started up. And what they did was they said, look, for every pair of socks that a customer buys, we as Bombas are going to contribute a pair of socks to a homeless shelter. From the beginning, from the first pair of socks sold. And the reason they picked that societal good, that donating to a homeless shelter, was they did research and discovered that socks were the #1 requested item in homeless shelters nationally. So this is brilliant. I think this was genius. And so from the very beginning, their model was every pair of socks we sell, we donate 1 pair of socks. And they have now elevated into a multi-million-dollar successful organization. So the idea that ESG can, is it costly? Are there costs associated with? Absolutely. But in the longer, medium term, profits will come.
Steve, to your point about Bombas, what's fascinating is here's a commodity that everybody gets, everybody buys. But if you go into the store and you see a slightly higher priced Bombas with a sign that every sock pair that you buy, we're going to give a pair to a homeless shelter, you'll pay 20% or 30% more. It makes you feel good. It's no longer a commodity. It's a competitive advantage.
It feels like I'm contributing, and even if the price point is the same, I still would rather buy from Bombas than from someone else, because wow, look at where my few dollars are going. They're going actually to doing some good. The next slide, please. Rick, you have some survey results here?
Sure, I think, and this is also fascinating. I mean, what it does is it validates, our perspective on profits with purpose and business purpose. Because a PricewaterhouseCoopers survey very recently of over 7,500 businesses, 95% of the respondents, this is the conclusion, 92% of the respondents believe that businesses can do well by doing good. It's very simple. The voice of the stakeholder has spoken. Companies with commitments to ESG policies will outlast their competitors. Survey 7,500 businesses, 92% of the respondents. And there was another one, Steve, the Global Scan, another consulting survey in 71 countries, that businesses with strong focus on environmental, social, governance profiles outperform their peer groups. It's as simple as that. And they, in fact, Steve, on this global scan, they outperformed their peer groups during the last couple of years of pandemic, which is even more critical.
Absolutely amazing. And we'll discuss this a little bit later on, but I just want to briefly mention that not embracing ESG is actually becoming something that could negatively impact your business. So with social media and with the velocity of getting sort of messages out, if your stakeholders, and again, your stakeholders are broad, they could even not only be tangentially involved with your business, just be aware of your business, can make lots of negative noise, Rick, about your company if they feel like you're not doing the right thing, and that can turn future customers away.
Absolutely right, Steve.
Okay, next slide, please. So with that little bit of context, where we're really saying, okay, so the purpose statement is not just a sentence, but it's a holistic view of this holistic approach to people, planet, and profits. What we thought would be helpful now is to sort of, let's see what this looks like in practice. So if we go to the next slide, Rick, you're going to take us through some examples.
Absolutely. And it's a mindset, Steve. As you say, it's a holistic approach to looking at sustainable purpose. General Mills, I mean, this is one of the largest companies in the world, but look what they say. We make food the world loves. Consumers' lives better. This is what we do. We boldly help heal the earth through responsible farming and have a positive impact on the world. 91% of our 10 priority ingredients are now sustainably sourced. Very simple. And it's not that expensive for them to do, but all the stakeholders now have an increased interest in this and buying from General Mills. TIA, Teachers Insurance and Annuity. It is actually the largest retirement plan for teachers in America. We choose funds and they invest about $100 billion in companies, big companies and also small companies. We choose funds that seek out companies striving to do right by the environment, contribute to society, and treat workers and customers fairly. Our goal number one, responsible investing can match or beat market returns, and that's fascinating. Or look at Travelers, the insurance company. Investments, again, a huge portfolio of investments for the long term. Investments reflect a long-term approach to sustainable value creation. Travelers considers ESG factors in all of their investment process.
Rick, before we go, I know you have a few more, but let's just unpack a couple of these. And so let's look at the TIAA. And by the way, I hasten to add that these are large companies, but these purpose statements transcend size, geography, and sector. You're going to see some similarities in all of these. So for example, in TIAA Kravitz, it says, we seek out companies striving to do right by the environment, contribute to society, and treat workers and customers fairly. That is a massively comprehensive purpose statement, isn't it? So if you look at it, it says, we're only going to invest in companies that we, TIAA Kravitz, believe those companies are actually doing the right thing for the environment and for society. And so do right by the environment, contribute to society, but also treat their workers and customers fairly. That pretty much covers the people planet, doesn't it, Rick?
Yeah, and Steve, to your point on TIAA, I mean, they have small cap funds, they have emerging growth funds, they have startup companies, they have entrepreneurial companies that they invest in. But look what they're looking for, to your point. They're seeking out companies striving to do the right thing.
And so this inherently also speaks to this idea that we touched on earlier, which is, if you're a company not doing the right thing, your company not doing the right thing, what's being defined as the right thing in ESG? If you're not making positive contributions to the environment, not making positive contributions to society, or in fact having negative contributions or negative impact, it's not only your customers that may not deal with you anymore. It's other organizations that may have an influence on your business. So TIAA Kravitz is basically saying, I'm not just going to willy-nilly invest in companies now. I'm going to only pick companies that fit this ESG purpose. Isn't that the way it's going here, Rick, with TIAA Kravitz?
Steve, that's correct. In fact, to your point before, they're looking for companies that articulate a sustainable business purpose, which I know you're going to discuss a little later and what that statement needs to be. But here, clearly, the largest institution in teacher retirement funds is looking for these type of enterprises.
Okay, next slide, please. You have a few more, I think.
Sure.
Examples.
Again, this is just a cross-section of a number. Perry's Ice Cream, one of the early adopters of ESG. Treat people, it's simple, treat people the way we want to be treated. our goal to provide a wholesome product in a way that is wholesome to Mother Earth. Now, who would have thought that this would be the concept of the founders of Perry's Ice Cream? Our goal is to make more, use less, decrease waste, improve the work environment, and make more good stuff. Simple, elegant, positive, and when you buy Perry's Ice Cream, you feel really good about it.
Yep.
Target, the stores, champions an inclusive society, embraces diversity, and strives to give everyone access to the same opportunities. And they have 20,000 hours of training programs just on this for their employees. Or PayPal actually did something. They matched 65% of their energy from data centers with renewable energy. And what's really interesting, the employees volunteered their time and talents to develop innovative, sustainable products. Pepsi, and it's like Coke, responding to stakeholder demands, invested in sustainable development projects, including eco-friendly, recyclable plastic packaging, cleaner transportation, more efficient, eco-friendly transportation, including tree planting and ways to improve water use efficiency. And I think Guinness Brewery is fascinating to me. It's a British 260-year-old family business. They launched a clean water initiative, focusing on its workers, reducing water usage, and the goal was to elevate society. But this last statement is so interesting. And this is a company that's been around for 260 years as a household name. You cannot take money from people unless you are willing for people to make money from you.
Excellent, Rick. So a couple of things on these, and I appreciate the cross-reference, the cross sort of examples here around industries. But again, I'm going to come back and say, yeah, these are generally big, mature companies. Rick, I'm a small business. How can I do all of these things? Like, what would you say to a smaller business when thinking about a purpose statement?
I think you have to define what the reason is why you're in business, and who do you serve, and what's your business purpose, and then articulate that. And I think you'll find, Steve, it aligns really, really well with the ESG goals and sustainable business purpose model.
Yeah, and we're going to expand on that later. Often, for the most part, smaller companies, small and medium-sized companies are already doing many of these things, and it's just a matter of sort of compiling it and preparing it into a cohesive communication model. But I'll also say another thing about small business. If I go back to the Bombas model, and again, Bombas is a bigger company now, but they started with this idea of one sock buy, one sock sort of donate. And what I love about that example is not just on its face, but they basically said, look, we're not going to try to be everything to ESG. In fact, you don't really see anything about the environment in their purpose statement, right? They're basically just saying, we're going to focus on the S, which is the society. And even there, we're going to really focus on something very narrow and just focus on socks. And so I think for a smaller business model and a smaller business company, the idea is not to be everything to all across ESG, but to pick a spot that you're very passionate about and just focus on that narrow area.
Steve, one point, like with Perry's Ice Cream or with Ben and Jerry's, they had a simple statement, that they focus from cows to cones. I mean, how elegant and simple, but basically the process of sustainability throughout their process.
Next slide, please.
So Patagonia.
So the final example, and this one is a very simply written one, which is why we put it in, but go on, Rick.
Yeah, we're in the business to save our planet. And then if you follow through on Patagonia, they use eco-friendly materials and monitor suppliers in their supply chain. Very simple, but they're very careful about their products.
And to me, the simplicity is brilliant. And often statements like this one sentence could take, quite a bit of time to sort of get consensus around and get the right sort of messaging out. Next slide, please. So we started out with a little bit of context on this sort of evolution of the sustainable business purpose and how it's really gone from the single focus on the bottom line of profit and expand it into what we are calling the triple bottom line of people, planet, and profits, which aligns with ESG, environmental responsibility, environmental stewardship, social responsibility, and governance. We saw some examples of larger companies, but let's take a look at, so what do I do if I'm a small and medium-sized business, or I'm just a startup and I'm thinking about starting a business? If I want to create an ESG purpose statement, what are some of the things I should think about? Next slide, please. So first, let's just, we talked around this, but let's just sort of try to get a definition of a purpose statement here. We sort of broken a purpose statement down into 3 bits here. The first one is it's a single statement that defines the reason your company exists beyond making a profit. That's this triple bottom line we talked about. The second bit we have is a purpose statement also illustrates how your product or service positively impacts the people that you serve. And then finally, once your purpose statement is established, now this is critical, Rick, once your purpose statement is established, it's not just a marketing statement. You're going to need then to demonstrate that it aligns with your business model, it aligns with your business strategy, it aligns with your objectives, and most importantly, it aligns with the outcomes that your stakeholders are going to be able to evaluate. That's pretty much really the critical part of a purpose statement, isn't it, Rick? That last piece.
And it also integrates with your business plan and your business model.
Absolutely, absolutely. All right, next slide, please. So, look, there could be 25 steps, there could be 100 steps. Each of these steps could be broken down into sub-steps, but for the purposes of this webinar, we said, let's just step back and say, if you had to pick 5 macro or large scale things to do to either create a purpose statement or to evolve my purpose statement or to change my purpose statement, what might I do? So the first thing that we see consistently when we speak to companies and we speak to owners, we speak to boards, board of directors, if the company has board of directors, the first thing we always want to investigate is, do you already have a purpose and or a purpose statement that we can begin with? And the answer is usually absolutely we do. We either have an integrated sort of implicit purpose, or we have an explicitly stated purpose somewhere. That's always the starting point. And if it's not written somewhere, it's really in the DNA of the company and often in the DNA of the founding of the company. So this is not difficult to find or to articulate by the owners generally. And step number 2 that we have here is very much unfolds from step number 1, which is so if we want to begin writing it, what was the passion, what were the objectives of the original founding of the company? What makes the company unique in the marketplace, unique in the eyes of stakeholders, unique in the eyes of the customers? So this idea for steps 1 and 2 is basically saying, let's go back to basics, go back to why we even started this company to begin with, what gets us excited to get up every morning and run this company and operate this company. And there at those 2 junctures lie the root of the purpose of the ESG purpose statement. The third step we talk about is what Rick spoke about earlier, which is defining the stakeholders that we're serving. And again, just to reiterate, this is a very broad definition of stakeholders. Anywhere from your employees, your customers, your vendors, your community, your regulators, et cetera, et cetera. And why are we doing that? Why are we defining that? Is because those stakeholders will have a voice in what they believe is important to them from an environmental sort of responsibility and a social impact responsibility. Does that mean you're going to entirely define your purpose for existence around what other people think? Absolutely not. But does it mean you need to sort of seriously consider and integrate your important stakeholders on what their expectations are and what their feelings are? Absolutely. And then And then step number 4 is, how do my products and services, my offerings, if you will, and the function of those products and services, I serve ice cream. The function is people are happy, they enjoy eating ice cream. What problems are they solving? What problems are they possibly causing? And how do we define alternative uses for those those uses and offerings? And then finally, we need to actually draft a communication, a statement of purpose. And we saw some examples of that, and we'll see a few more examples. But Rick, let me turn it over to you, and let me ask you to just, if I could put you on the spot, talk about step number 4 a little bit more. Step number 4 says, define the offering, so that's easy to do, and contemplate the functions that they serve. That's not difficult to do. But the second part is a little bit tricky, is what problems are they solving and what are the alternative uses? So what problems are they solving? So what problem is ice cream solving? Sometimes it doesn't solve a problem for me. Sometimes it's too many calories. But what does that really mean?
I think basically, to your point about problem solving, it's really how are they satisfying their customers and what are the changing needs of their customers. And a lot of new business emerges from old school companies that don't evolve and don't remain competitive. In fact, in my risk management course, I talk about the large businesses that are, and the corporate graveyards littered with large companies that haven't evolved to the changing needs and demands of their customers. So basically, the new business solves these problems and evolves to the changing needs of stakeholders.
Critical. We saw a few of your example purpose statements that talked about things like 90% of the raw materials we source now come from sustainable sources. And so when we see a statement like, okay, I have products and services, I've been selling them for 3 or 4 years, what problems are they solving? What this statement is really basically saying is, go back to your products or services, go back to the historic ways that you are either creating, manufacturing, developing, or sourcing those products and services, and take a fresh look at if there's anything that that original sourcing is doing to hurt the environment, to hurt society, and make some changes around that say, okay, look, we're still going to give you the equal quality product or service, but we've tweaked or we've made wholesale changes in how we source the raw materials for those products, how we employ vendors who have proper working conditions in their factories, and we're only going to use those types of vendors. We're only going to use those types of products. Is that a fair way, Rick, to describe?
Steve, excellent. And to your point also, there's legislation like in California on supply chain sourcing and human rights issues and so forth. So it's no longer just doing the right thing, it's making sure that you're complying with regulatory and legislative rules, and that applies to all businesses of all sizes. So it's do the right thing, but also pay attention to where your supply chain sourcing comes from and how, from a human rights perspective, they're complying with the new demands of stakeholders.
And look, we can't sugarcoat this part of what you're saying because it's crucial, and this is for companies of all sizes, of all products and services. In today's world, we as small companies, medium-sized companies, large companies, we as companies are now responsible not only for our direct involvement with social and environmental issues, for example, like employee safety, safe working conditions, but now we're being expected to be transparent about our extended supply chain. How far down the supply chain doesn't matter. Where we're sourcing our raw materials, we are going to be held responsible for the working conditions of the vendors that we're using down our supply chain. Isn't that fair, Rick?
Sure. Steve, I was also thinking of chocolate, cocoa, and coffee, and how so many of the companies today are talking about how they sustainably source. or they actually help underage workers, and they actually send them to school on the cocoa plantations to get a better education. And when you buy these products, it makes you feel good, but it also gives you a better sense of purpose, on top of which, from a profit perspective, you can actually charge more.
Exactly. So what we see here, again, this is a very high level set of steps. That this is more complicated than we've made it appear on the slide. But the idea of steps 1 through 4 are really information gathering and prioritization as a company. And once we do the information gathering, during that information gathering, we're going to be speaking to a range of stakeholders, including our employees, and getting inputs from those cohorts of stakeholders. And that information then will lead to the development of a purpose statement. Next slide, please. So then the slide after this, and then we're going to open it up for questions. We want to present some additional examples, but what we summarized here are a couple of things. Here's an example of one. Our purpose is to support the health and well-being of our planet and everyone who lives here. The second one is our purpose is to increase accessibility to life-saving equipment for patients in underdeveloped countries. Our purpose is to provide people with the ability to purchase products that they need at a price they can afford. And the reason we put these 3 examples in, you can get an idea that the second example, life-saving equipment, has to do with healthcare. But we wanted to show that these are all 1-sentence purpose statements, aren't they, Rick? And in some respects, they're narrowly defined. And so this doesn't need to be paragraphs and pages, but it does need to be a succinct, sort of unique purpose that captures some notion of the triple bottom line of people, planet, and profits. Next slide, please. The final point we want to make, and we touched on this, but this is crucial. And we've been talking about a purpose statement. We showed you examples. Some are a couple of sentences, some are 1 sentence. And they clearly play a role in communication. They clearly play a role in branding to your stakeholders. They might be on your website. They might be in your social media campaigns. They'll certainly be in reports on environmental, social, and governance issues that you may issue. They'll be in your conversations with employees, with customers, with vendors, with the community. But you're going to be held accountable to whatever your purpose statement says, more so than ever in this day. And what do we mean by accountability? So your purpose statement is going to send a signal, you can see in the first check mark, on your commitment to people, planet, and profits. It's going to your purpose statement is going to attempt to balance the needs of differing stakeholder cohorts. Some stakeholders will think environmental is more important, environmental issues. Some will think certain social issues are more important. They're not all your stakeholder cohorts, your customers, your employees, your community will not be in total agreement, but they do want to see what you're doing across the spectrum. But the last bullet is critical, the last check mark. Linkage to performance will impact how your stakeholders feel about you. So once you create a purpose statement and communicate it to the marketplace, you're going to be held accountable for that purpose statement. People are going to hold you responsible for acting on that purpose statement. And so in the last statement, we say what matters is whether the company takes the purpose statement seriously. This cannot be, Rick, a check the box marketing campaign that says, well, look, I'm doing everything around sustainability, just trust that I'm doing that. And I'm going to say, well, we're going to trust, but we want to see evidence of what you're doing. And they're going to expect some notion of ESG communication on specifically how your purpose statement aligns with your business strategy, with your business model, with your business objectives, but most importantly, tell me what specifically you're doing and what the outcomes were on your business purpose with respect to social responsibility and environmental stewardship. For example, I go back to the Bombas example, which is for every pair of socks we sell, we give a pair of socks away, and they report periodically on the number of socks donated to homeless shelters. That's an easy metric, but it's an important metric that says we are putting our money where our mouth is in terms of our purpose statement. I'm sorry, Rick, go ahead.
Now, Steve, there's two other, I mean, these are really excellent points, but there's two other mandates today that may not have existed 30, 40 years ago. And what is the social media feedback? Because if these enterprises, whether they're small or large, are not satisfying the customer needs, you're going to hear about this in social media. And the second is the new organizations that actually are rating ethics and sustainability within enterprise. Companies like Ethisphere and so forth. For example, I was looking at Patagonia, which you raised before, and they have a review which gives them 4 out of 5 for planet, 4 out of 5 for people, but their third is not profits, but animals and their treatment of animals. And they're also 4 out of 5. And this is visible. It's in everybody purchasing a Patagonia products mindset.
Right. The final point I want to make, I think, is something to consider as well. I may be, let's say I have a small business. I'm just starting out. I'm trying to get, scale, and I'm trying to, sort of grow profits so we can continue to expand my business. There might be certain things I'm relying on right now that I simply can't make immediate changes to, Rick, with respect to impact on the environment, for example. And so does this mean I'm sort of out of the picture? I'm out of play? And the answer is absolutely no. I mean, if you used Pepsi earlier and Coke, actually, and if you think about it, objectively, and Coke and Pepsi will say this, is that, look, by some views, Pepsi and Coke are not doing harm to certain aspects of society, right? With sugary drinks, for example, with plastic bottles in terms of waste and clogging up waterways. And so they recognize that. They haven't eliminated selling soda, but what are they doing? They're taking those negative impacts and they're doing everything they can in the longer term to sort of turn that trend and create opportunities where plastic bottles have less of an impact, create opportunities for less sugary drinks and for smaller sizes. And so I think this is an important message that transcends and is particularly crucial for smaller companies where I may be reliable, for example, on fossil fuels for some of the products or services that I'm doing. I'm not going to sort of walk away from that because that's not something I could do immediately, but how can I operate within that and make things better than they were before? Is that a fair way to look at it?
Yeah, Steve, those are excellent points. And what's really interesting in the sustainability reports of the bigger companies, of which almost 100% of the companies do that, you'll see in the sustainability reports that say, by 2025, we expect to have 90% of our plastic bottles in a recyclable. Or you'll see somebody, well, we looked at it, and this year, unfortunately, we didn't hit our 70% target. But it's basically a metrically driven basis for evolving your business in the ESG model.
And complete transparency where the stakeholders will go, fine, I get it. You didn't make it this time. Lots of good reasons for that. Many companies don't make it, but thank you for sharing this. And you're not going to make it, but you're still forging ahead to try to make it going forward. I think that's crucial. So I think if you go to the next slide, I think we've completed our formal presentation. And we want to thank you for your attention to this. And if there are any questions, we're happy to take them.
First, I just wanted to thank you both for a really kind of insightful and excellent presentation. I think it really builds on session 1, and in particular, the area with respect to the purpose statement, I think really aligns so well with the work that our centers and our advisors do day in and day out, how to build that into your business plan, the model that you had referenced. Kind of being able to highlight, what makes you unique and the problems that you're solving. I think this is so important in any small business, being able to kind of tap into that and kind of identifying, what's special about you and what's special about that business model. One other thing I'd like to reference and really appreciate you all bringing up, I guess, the example with TIAA in terms of performance. And I think at the end of the day, you know, having ESG and having all of these things incorporated into what you're hoping to achieve is so important. But at the end of the day, you know, whatever you're bringing to the market, good or service, still has to meet some sort of market need. And the fact that that example that you provide with respect to TA is, you know, I think the reference point I think you made was either match or beat the market anyway. And kind of, you know, being able to meet these sustainable needs, I think is so crucial, because it's not just, you know, we're planting trees or we're being good to our employees, but it's also we're doing something that's important and that's not being effectively provided in the marketplace as well. So I really appreciate you both kind of bringing that to the forefront and making sure that was highlighted as well.
Yeah, thank you for that, Andrew. And I think the other thing too, with respect to your advisors, it's also, if you're a bit more of a mature company, it's also good to go back. You could say, well, we have a purpose statement. It's not a bad idea to go back and take a fresh look at it and perhaps think about revising or updating.
You know, one of the practical elements here is I was looking at the CPA journal, and we say, what kind of inks are we using? And now we're only using soy-based inks. Did it cost us a couple of pennies more? Yeah, but it's recyclable, it's renewable. We actually, that's an advantage that we articulate to our members.
Andrew just sent me a chat. He said, how do you keep your readers awake reading a journal called the CPA Journal? Right?
Very short, discrete, small bite of information. That's right. And I also offer lower cost caffeinated drinks.
Caffeinated drinks. That's a good purpose statement.
Tweet friendly comments.
Yeah, exactly.
Are there any examples of companies that over prioritized ESG and stumbled because of it? Can these principles be taken too far and end up hurting a business?
I'm trying to think of some business, and absolutely, there are some startups that are all socially responsible businesses, but don't keep their eye on the profit or the bottom line or the triple bottom line. So they only are interested in one of the three. And absolutely, but I'm trying to think of an example.
Yeah, I could say that there's a concept that we talked about in the previous webinar. It's called greenwashing. Joe, was that from Joe? Yeah. And so this concept of greenwashing is this idea that we're just going to overly state our contributions and our impact on the environment and on society, and with the hope that nobody's going to hold us accountable. And there are numerous examples, large and small companies doing that. I recently was interviewed by a journalist for a company that is providing investment opportunities for consumers. So you can go on to and it's all, you know, web-based, and it's all websites, and you can go on and pick funds that are socially responsible or environmentally responsible funds. And that's a big deal right now. So, you know, people want to put their investment dollars in companies that are socially and environmentally responsible. And one of the things that this online investment company is trying to do is, in their funds, you know, a fund would have maybe 5-10 companies that's part of the fund. They are struggling to try to figure out whether those companies are greenwashing or they're truly making an impact going forward. So it's a really important question you're asking. So it's not just over committing, it's also sort of exaggerating as well. So Rick talked about over committing, and my sort of point of view is about exaggerating. Both are not a good thing to do. And I think with the point of over committing, I go back to my Bombas example, is pick one thing that you can get your arms around that doesn't impact the rest of your business, and just focus on that, and just be transparent to your stakeholders. Say, look, here's where we're starting. As we scale and we get bigger and we have more resources, we'll scale our sort of ESG impact.
Steve, you know, to your point about greenwashing, I'd like to add something. I was at a conference, and there were probably 6 consulting firms, and all they did was work on greenwashing. That was their, but the question, you know, is outcomes. You know, they may say something, but Steve, to your point earlier in the presentation, it's not what it is you say, it is what it is you do. And the outcomes are being reviewed by the largest and the smallest lenders and investors. It's not what you say, it's what you do.
Absolutely.
Great.
Thank you for
Well,
letting me squeeze that one in. I so
my pleasure.
appreciate it.
Yeah, Andrew, Renee, thank you for a wonderful job hosting and facilitating. It's a pleasure to be here.
Absolutely. Thank you.